how to become a profitable trader. It is too easy. I know, you are already skeptical. You have heard that before. Some guru on the internet telling you it is simple, it is easy, just follow these 3 steps and you will be printing money by next week. That is not what this is. What I am about to tell you is not a shortcut. It is not a secret system. It is not something only professionals know that retail traders do not. It is something far more uncomfortable than that. It is the truth. Plain, simple, and completely available to anyone who is willing to actually accept it. And the reason most traders never become profitable is not because this truth is hidden from them. It is because they hear it, they nod their head, they say, yes, I understand that, and then they go back to doing the exact same things that are costing them money. So today I am not just going to tell you the truth. I'm going to make sure you cannot ignore it. Let me start with a question. How long have you been trading? 6 months? 1 year? 3 years? 5 years? And in that time, how many strategies have you tried? How many indicators have you tested? How many YouTube channels have you followed? How many courses have you bought? How many times have you completely overhauled your approach because the last one was not working? If you have been doing this for more than a year and you are still not consistently profitable, here is what I need you to hear. The strategy was never the problem. Ride that again. The strategy was never the problem. I do not care if you have tried moving averages and they did not work. I do not care if you studied price action for 6 months and still lost money. I do not care if you paid $2,000 for a course and the setup stopped working after 3 weeks. None of that means the strategy was broken. It means your execution was broken. It means your psychology was broken. It means you were bringing emotional interference to every trade, and that interference destroyed whatever edge the strategy actually had. This is the truth that makes becoming profitable seem complicated when it is actually simple. The strategy is almost never the problem. You are almost always the problem. And here is why I say this is too easy. Once you accept that you are the problem, the solution becomes obvious. You stop searching for a better strategy. You stop looking for a new indicator. You stop switching systems every time you have a bad week. You start working on you, and working on you is not complicated. It is uncomfortable. It is challenging. It requires honesty that most people avoid, but it is not complicated. Let me show you exactly what it looks like. Step 1, pick one strategy and commit to it completely. Not 2 strategies, not 3. 1, it does not need to be perfect. It does not need to have a 70% win rate. It just needs to have a positive expected value over a large sample of trades, which means it wins often enough, and the wins are large enough relative to the losses that the overall result is profitable. Almost every widely taught trading strategy meets this criteria when executed correctly. Moving average crossovers, support and resistance, breakouts, price action patterns, trend following. These strategies work, not every time, not every week. But over a large sample of consistent executions, they produce positive results. The problem is not the strategy. The problem is that most traders never execute any single strategy consistently enough for long enough to see what it actually produces. They try it for 3 weeks. They have 2 bad weeks out of 3. They conclude it does not work. They move on. But 3 weeks is not a sample size. 3 weeks is noise. You need hundreds of trades to know what a strategy actually produces. And you will never get hundreds of trades from any strategy if you abandon it every time you have a rough patch. Pick one strategy. Study it until you understand every aspect of it. Know its win rate. Know its average win and average loss. Know the market conditions where it performs well and where it struggles. And then commit to it. Not for 3 weeks. For at least 6 months of consistent execution. That commitment alone will put you ahead of 90% of traders. Because 90% of traders cannot do it. Not because they are not smart enough. Because they lack the patience and discipline to stick with one approach long enough to see what it actually produces. Step 2, define your rules in writing before you ever open a chart, not in your head. In writing your entry criteria, exactly what conditions must be present for you to enter a trade. Not approximately. Exactly your stop loss placement, not a general idea of where you will exit. The exact rule for where your stop goes on every trade, your target. How do you determine where you are aiming for? What is your minimum risk to reward ratio? What is the rule for when you take profit, your position size? How much do you risk per trade? The answer should be 1% or less of your account, every time. Without exception, your conditions for not trading. What market conditions cause you to step aside? What time of day do you not trade? What do you do when the market is choppy and unclear? Write all of this down, every single rule, every single condition, until you have a complete trading plan that covers every situation you might face. And then here is the hard part, to follow it, every trade, without deviation, without improvisation, without making exceptions because this trade looks slightly different, or because you have a feeling about this one. The plan is the edge. Your feelings are not the edge. Your instincts are not the edge. Your confidence on any given morning is not the edge. The written plan, executed consistently, is the edge. Every time you deviate from the plan, you are not expressing confidence. You are expressing emotional interference. And emotional interference costs money. Step 3, risk 1% or less per trade, no exceptions. I have said this before on this channel. I will say it again because it is that important. 1%. If your account is $10,000, you risk $100 per trade. If your account is $25,000, you risk $250 per trade. If your account is $100,000, you risk $1,000 per trade. This rule does three things simultaneously. First, it protects your capital. You can have 10 losing trades in a row and still have 90% of your account. You can have 20 losing trades in a row and still have 80%. You are still in the game. You can still trade tomorrow. Second, it manages your emotions. When you risk 1%, the trade stops feeling threatening. You can breathe. You can think clearly. You can follow your rules without the emotional pressure that comes from having too much at stake. Third, it forces you to take your process seriously. When the dollar amount on any trade is small enough to be managed calmly, you stop gambling and start executing. You stop needing this trade to work and start focusing on whether you executed correctly. 1% feels boring. That is exactly how it should feel. Boring trading is profitable trading. Exciting trading is expensive trading. Step 4, measure success by execution, not by profit. This is the step that most traders skip. And it is the step that changes everything. After every trading session, do not ask how much money did I make today. Ask, did I follow my rules today? Did I only take setups that met my exact entry criteria? Did I risk 1% or less on every trade? Did I place my stop loss before entering and leave it where it was? Did I manage every trade according to my written plan? Did I avoid trading when my conditions for not trading were present? If the answer to all of those questions is yes, you had a successful session. Regardless of whether you made money or lost money, because here is the mathematical reality of trading, if your strategy has a positive expected value and you execute it consistently over a large number of trades, you will be profitable. It is mathematics, it is inevitable, but that math only works if you execute consistently. The moment you start deviating from your rules, you introduce a variable that the math cannot account for, and that variable almost always destroys the edge, so measure yourself by execution. Build the habit of clean execution first, and trust that consistent clean execution of a valid strategy produces profit over time, not every day, not every week, but over time. 5, review every trade honestly and without ego. Keep a trading journal, not just the entry price and exit price and profit or loss. The full picture. What was the setup? Did it meet all of your criteria? What were you feeling when you entered? Did you follow the plan on the exit? If not, why not? What were you thinking when you made the decision to deviate? Review this journal regularly, weekly at minimum. Look for patterns. Are you consistently breaking the same rule? That rule is tied to an emotional conflict you need to address. Are you consistently taking trades outside your criteria? That is fear of missing out driving your decisions. Are you consistently exiting winners early? That is fear of giving back profit. Are you consistently holding losers past your stop? That is inability to accept being wrong. The journal shows you the truth. And the truth is where improvement begins. Most traders avoid honest review because it is uncomfortable. It shows them things about themselves they would rather not see. Their rule breaking, their emotional patterns, their gap between what they say they do and what they actually do. But the traders who are willing to look honestly, who can sit with that discomfort and learn from it, are the ones who actually improve. Because improvement requires accurate feedback, and the journal is the most accurate feedback mechanism available to any trader. Now let me address the elephant in the room. You have probably heard most of this before. Pick one strategy. Follow your rules. Risk 1%. Keep a journal. It is not new information. It is not secret knowledge. It has been said in every trading book worth reading, including every book Mark Douglas ever wrote. So why are most traders still not profitable? Because knowing and doing are two completely different things. You know you should honor your stop loss. But when price approaches that stop and the loss is about to become real, something happens inside you that overrides the knowing. Fear takes over. The hands move to the keyboard. The stop gets moved. You know you should risk 1%. But after a good week, the confidence is high and the ego wants to capitalize. So the size goes up and the risk goes up. And the next losing trade hurts more than it should. You know you should stick to your strategy. But after 3 losing trades, the doubt creeps in. Maybe this system does not work. Maybe I should try something else. And the cycle of switching starts again. The gap between knowing and doing is not closed by more knowledge. It is closed by training. You train by trading small enough that emotion does not override your execution. You train by following your rules on 100 consecutive trades until following them becomes automatic. You train by reviewing your journal honestly and identifying where the breakdowns happen. You train the same way an athlete trains: repetition, honest feedback, incremental improvement, patience. And here's the thing about that training: it is available to anyone. You do not need special talent. You do not need to be mathematically gifted. You do not need connections or inside information or a $100,000 account. You need a valid strategy. You need written rules. You need 1% risk. You need honest review. And you need the willingness to do those 4 things consistently for long enough that the math can work in your favor. That is it. That is how you become profitable. Not complicated, not secret, not reserved for professionals or people with special skills, available to anyone willing to do the actual work. The work is not finding a better strategy. The work is becoming a better executor of the strategy you already have. The work is not learning more. The work is doing more consistently what you already know. The work is internal. It is honest. It is sometimes uncomfortable, and it is completely within your control. I said at the beginning that this is too easy, and I mean that. Not easy as in effortless, easy as in simple. There is no complexity here, no advanced technique, no insider knowledge, just 5 steps, applied consistently. Over time, pick one strategy and commit to it. Define your rules in writing. Risk 1% per trade, no exceptions, for success by executions, not profit. Review every trade honestly and without ego. That is the whole system. That is the complete answer to how you become profitable. Everything else is noise. The traders who do these 5 things consistently become profitable. Not immediately, not without difficult periods, but eventually, inevitably, if they stay in the game long enough, the traders who keep looking for something more complex, something more exciting, something with a higher win rate or a bigger edge, will keep searching, because there is always another strategy to try. There is always another course to buy. There is always another reason why this one did not work and the next one might. And while they are searching, their capital is shrinking. Stop searching. Start executing. The answer was never out there. It was always in here. If this video cut through something for you today, if it landed differently than other things you have heard, hit that like button right now. Stutzpers, because this channel is for traders who are done searching and ready to start building, and leave a comment below. Tell me honestly, which of these 5 steps is the one you struggle with most? I already know the answer for most of you. But tell me anyway. I read every single comment. Everyone, protect your capital. Follow your rules. Stay in the game. See you in the next video.